China's economy slowing during the third quarter, rising 6.9%. And while that's ahead of estimates of 6.8%, it raises questions over whether the world's second largest economy can meet its 7% growth target for 2015. Let's bring in Craig Erlam, a senior market analyst at Oanda, with us now from London. And Craig, it's nice to have you here. Your reaction to the numbers?
Well, I think it's been a bit of a mixed bag, really. Like you say, the growth figure actually beats estimates slightly at 6.9%. There's a few components of it, though, that do worry investors. Things like fixed asset investment, industrial production, I think, is a particular concern. The fact that it missed so significantly, really having a negative impact on commodities and commodity stocks today. But then the consumer is really helping to support this number. We are seeing retail sales pick up a little bit faster than expected. And when you're looking at a country like China, which is trying to transition away from investment and exports and move towards domestic consumer-driven growth, then really this is a little bit of a positive. Of course, we'd like to see more from the consumer, but really this is a pretty decent report despite the fact that there are weak aspects. I guess the only real question that we have now with respect to the China data is it reliable? And this is something that's been heavily questioned. Right,
and we'll talk about the reliability in a moment, but when you think about all of the measures China took to prop up its economy in the past year, including 5 interest rate cuts, don't you think that those measures don't seem to be working?
Well, either they're not working or they're working and the economy is actually a lot weaker without them. I guess that's going to be the real question facing policymakers in China right now. I think we're going to see further stimulus measures, both from the People's Bank of China, but also from the ruling party as well. And this is going to have to be an effort that's ongoing, because this isn't just a Chinese slowdown we're seeing. We're seeing a slowdown in many economies. So China's facing issues both at home, but also abroad. And it needs both to function well if we're going to see strong economic growth.
And do you think we'll see rates cut again? And if so, when?
Well, I think we'll see at least one more rate cut this year. The reserve requirement ratio in particular, I think we could see further stimulus as well from the government as well. But I think really going into next year, I could say 2-3 more interest rate cuts from the People's Bank of China in the next 9 or 12 months.
Now, this GDP print was actually better than expected in terms of what analysts were looking for, and that raises questions over the reliability of the data coming out of China, that perhaps politics played a role. What do you say?
I think that's very real concern, and people seem to be looking at this like it's a very convenient number. It's ahead of expectations, only slightly short of the 7% growth target that they have this year. And I guess this is always going to be the issue when it's the government releasing the statistics as opposed to an independent body. And we see it all the time with the trade balance figures as well. I think this is going to be an issue which is just ongoing. We've got to take these figures with a pinch of salt and really delve deeper into the other data that we have and try and gauge our own opinion. People thinking growth is closer to 5%, I mean, this probably is more accurate.
All right, now in terms of the global economy, does this latest news out of China put some sort of a slowdown in the spotlight? I mean, we had the IMF cut their global growth forecast for 2015 earlier this month.
Absolutely. I mean, if you look at some of the fastest growing countries in the world that have really supported these high levels of global growth, it is the likes of China and other emerging markets. And all the other emerging markets are actually heavily reliant on a strong China in order to function well. We are in a global interconnected economy. So these bigger countries, the likes of China, which have been responsible up until recently for around half of global growth, if you start to see a slowdown in this country, you are going to see this have a negative impact globally. This we need to see countries like the US and regions like the Eurozone really step up now and really fill a void that's being left by China.
All right, Craig, we'll leave it there. Craig Erlam, a senior market analyst at Oanda. Thanks very much for joining us from London. I'm Scott Gamm, and you're watching The Street.